Hello, everyone. Thank you all for joining us for the Small Cap Insights podcast powered by Darrow Associates. We are a leading full service investor relations firm focused primarily on small cap equities. Joining us today is Matt Kreps, Managing Director of Darrow Associates. Matt, thank you for joining us today.
Sure thing. Happy to be here.
Awesome. So let's go ahead and get started. Can you kind of tell me about your career? How did you start working in investor relations and specifically at Darrow?
Yeah, it's a little scary to say that I think I've been doing this for over 25 years now, and sort of came into IR as a discipline a little bit by accident because I have a background in mass comm and economics, and I started working for a consulting agency after I finished my undergrad degree. And a couple of our clients were finance related, and we were doing a little bit of investor relations, but under kind of the Marcom or corporate communications umbrella. And I didn't realize at the time that this was an entirely separate discipline. And when we moved to Dallas, I was looking for a job and went to a professional society meeting, was meeting with a few people that I've been introduced to as a network. And one of them said, well, if you know economics and finance, you should talk to this investor relations agency. And that's kind of how I fell into investor relations as a specific discipline. And funny enough, Jordan and I first met because we had clients that were competitors. And one day I reached out to him and just said, "Hey, our clients are kind of trying to build this new industry. Let's, be thoughtful about what we say, and try to work, collaboratively here while competing, in order to make sure that we're really promoting the opportunities and the industry opportunity that both of us see." And kind of led to getting to know each other and ultimately working together. About 6 or 7 years ago, came on board, and the rest is history.
Yeah, that's great. So a lot of experience. In that experience, when do you think public companies should look into hiring external investor relations providers?
This is one of those questions we get a lot when we talk to prospects that we've been introduced to, because they understand there's a need, but they're not quite sure how to address that need or when they should be addressing that need. And and one of the things we tell them is, frankly, you should probably have an external IR firm available to you, even long before you think you really need it. Waiting until you have a crisis or a situation or somebody departs the company, you're already a little bit behind the eight ball. Whereas you can bring a company on, and somebody like a Darrow is particularly a good example of this, where you can bring on really senior expertise, really strategic advisory services. And if nothing else, use this as a sounding board. We've worked with some really large companies, some really small companies. Sometimes they have internal IR. One of the largest companies I work for had an internal VP of IR, incredibly talented, very good in the business, and we were his sounding board. That was the most valuable thing we provided, was an opportunity to bounce ideas, to for us to challenge what his assumptions were, to dig in, do research, and that can be really valuable, even in its own right. But when a company is looking at its communications and saying, "I feel like we're not getting the most value from it," that's a really good opportunity to look at perhaps investing a little bit of operating cash into an outside advisor that can help you discern why you have that gut feeling, because it's probably right, and how best to kind of go about addressing it, or use new tools, engage with investors in new ways that the IR firm is seeing and maybe a corporate entity isn't seeing.
Yes, I totally agree. And once companies kind of bring on that investor relations firm, what are some things they can do or executives can do to maximize the effectiveness of investor relations?
Well, that's the crux of it, right? We're always trying to create the most value. And when companies commit capital to hire an outside advisor, they need to get a return on that capital. And so I think one of the key things they can really do is look at what's going on around them. Use the external advisor to be their eyes and ears on the street, to compare what they're doing to what other companies are doing, to look at peers, to look at companies that are with perhaps maybe a completely different industry, but a similar business model, and go beyond just the traditional or conventional internal scans that most companies are doing. The board books of how we comparing to our peers, how we're performing against market indices, and so forth. But let's go beyond that, really dig into what are some true best practices, what are some new innovations that are coming out, and how could we use those maybe we don't get a high return. Maybe we can't quite track the return on some of these new channels right away. But I think we can also find ways to explore those channels, to use them to get a good foothold and find ways to create value over time by adopting them smartly from the beginning and getting engaged early on.
Yes, in my opinion, one important way to maximize investor relations effectiveness is to foster relationships between the buy and sell side. What are some ways that you go about fostering those relationships?
Yeah, and this really is what it is. It's a business of relationships, whether it's our relationship to the client, our relationships to buy-siders, to research analysts, to investment bankers. And what we hope to do is transition those relationships from being our relationships to becoming client relationships. We want those relationships to grow, to expand, and diversify over time. And one of the key things to do really is to cast the net early. What a lot of companies do, they look at where they are today and who are the investors that should own their stock today. And that's a great place to start, but it's really only seeing a small portion of the market. What we really like to do is look at who should we be talking to today? Let's build those lists, whether it's buy-siders, wealth managers, and family offices, research analysts, investment banks. Make that a really robust, dynamic, ongoing conversation. And that's really the key is make it a conversation. It's not just that we're sending information out to them, it's that we're talking to them, we're getting feedback from them and using that to inform what we're saying to the street, to do better with what we're saying to the street, to give them additional information that helps them understand the business or helps them address a key concern that they may have. But the second part of that is really looking into the future. Let's go out 6 months. Let's go out 12 or 18 months. Let's even go out 2 years. Where is the company going? How is that going to evolve? Is the company market cap going to grow considerably and move from being a really strong small cap into an early mid cap company? What what does that do to the investor base? How does that change our research coverage or our conference opportunities? We're really planning that today so that as those next 3, 4, 5 quarters progress, you've already put in the groundwork. You've already started the dialogue with those investors that are in your target. When you've grown the company's market cap by another $200 million, and suddenly you're a bigger name and you fit better to these investors that like your story, but you just weren't big enough or you didn't meet their portfolio criteria. Now all of a sudden you do. Why wait to start that dialogue? Be on their radar so that they can move as soon as you clear that criteria.
Yeah, I totally agree there. And lastly, kind of a general question. But for you, what are some of the qualities that make a company stand out to the investment community in general?
Yeah, and this is really the key. And this is where a lot of companies actually struggle a bit because they know their business so well. They understand what they're doing, they know what they're trying to achieve, they know what their deficits are, they know what their strengths are. The challenge is that most companies don't really look at that from an investor standpoint. They look at it from the internal standpoint. And one of the hardest things for a company to do, and one of the first things that we do is really look at the company and say, if I'm an outside investor coming to this story without all the inside knowledge, without the conversations that we have with the management team, with the board members, and I'm just looking at what's publicly available, what kind of conclusions am I going to draw? And that analysis is really critical because it comes down to some really fundamental things around just first and foremost, good credibility. This is a management team with goals and targets that you can trust, that they've enumerated a really clear pathway of how they get there, that they've addressed how they're going to overcome the hurdles that they need to work on in order to achieve those goals. I think another thing is really thinking about it from the investor standpoint of what creates value and being responsive to the street because the street may say, hey, this is a fantastic business. I just don't see the growth. Or you guys are generating a great amount of cash flow, but I don't know what you're doing with it. Or I don't know that you're doing the right things with it, even. Maybe there's a disagreement between the investors and the management team about what they should do with those resources, how they should use the balance sheet to create new value for the stockholders. And that dialogue is really critical. And it's one of the things that the street really cares about, and they appreciate when you have that conversation, even when you disagree. Even if you say, "Hey, we hear what you're saying. We have a different strategy. Here's why." And they may disagree, but you know what? If they think that you're still on the right track and there's value to be created, they'll happily disagree while they're being stockholders, as opposed to disagree while not being stockholders. So I think one of the key things that really stands out is looking at the company through the eyes of the street and really building a strategy that aligns both the corporate strategy and the investor strategy toward that goal of creating value for the investors.
Yeah, that's great. Well, again, thank you, Matt, for sitting down with us, and thank you all for tuning into another episode of Small Cap Insights podcast. If you enjoyed today's conversation, want to learn a little bit more about how strategic investor relations can elevate your company's visibility and credibility in today's market, please visit www.darrowir.com. We'll see you on the next episode, and thank you, Matt.
All right. Thank you, Jack.